Well, now that the election is over, tomorrow's Fed decision is front and center. Joining me now, Richard Clarida, PIMCO Global Economic Advisor, and of course, the former Federal Reserve Vice Chairman. Welcome back. It's nice to see you again.
Good to see you.
What's going to happen tomorrow?
Well, I think with a high degree of confidence, I can say they're going to cut rates by 25 basis points. They may not do all that much more tomorrow. I don't think there will be very significant changes to the statement. And of course, there are no dots. So I think all eyes, as usual, on the chair's press conference. But do expect 25 basis points tomorrow.
How do you think a Trump presidency is going to impact policy next year?
I'm glad you phrased the question that way, because I don't think it's really going to impact policy tomorrow or December. I think Jay Powell and the committee have made clear that rate decisions in 2024 depend on 2024 macro data. But obviously, policy does need to be data dependent because inflation is still running above the 2% target. And the contours of fiscal policy and other decisions, including on regulation, will have an influence on the outlook. And so I think as the year evolves, the Fed and markets will get a better sense of how that's all going to work out. But I think it's too soon to tell with any precision what it could mean, depending on the details of policy.
But what you see on, let's just say, what is on paper is not necessarily what's in practice. So yeah. What's been talked about, or at least speculated on, I think we'll make our baseline for the conversation.
Yeah.
If we're able to reflate the economy in the way that he's suggesting by certain policy maneuvers that he'd like to do, does that increase the likelihood that the Fed won't be able to cut as many times as maybe we thought, even as we've dialed back our expectations as it is?
It could be, Scott. In September, the committee, more or less through the SEP projections, established a working baseline of 50 bips this year. We'll get 25 tomorrow, perhaps another in December, and then potentially, 4 more cuts next year. I think those will depend on the flow of data. In particular, if inflation were to stay stuck and not be drifting down towards target, we could get fewer rate cuts next year. I think that will be a function of the outlook. If inflation continues to decline, I think the Fed will certainly continue to adjust policy lower. And so I think in that sense, the traction that policy has on the economy is really going to be influencing the way the Fed thinks about rates next year.
How are you thinking about the issue of the deficit? How might they be thinking about it? As some very smart people are opining on it, including Larry Fink of BlackRock, who says you can get out of this mess. You just got to keep nominal GDP growth high enough to do so.
Well, yes, but I think what you have to recognize is unless you get even more surprises on productivity growth, higher nominal GDP growth could mean higher inflation. And I don't think the Powell Fed is going to sign up for that. So it depends on how you get the nominal GDP growth. I think we have to acknowledge, Scott, you and I've done your show several times. The U.S. economy has been remarkably resilient. We've had better than expected growth in 2023, 2024. And so there is a possibility of getting, even stronger growth in that nominal GDP through that channel. But to the extent that higher nominal GDP would be driven by higher inflation, I don't think the Powell Fed would sign up for that.